Good morning. Welcome to Forex in Four. Today is Tuesday, December 6, 2011. Okay, so we are starting out here by looking at the Australian dollar. And yesterday I put up on the chart of the day that I thought that this range here for the Aussie would hold, that we'd probably sit up above this pivot support here at about, I guess it's now the pivot up here at about 102.30, and that didn't happen. We came back and we actually pulled right back down to 102. Well, what happened? Okay, RBA rate policy meeting last night, and they did indeed lower interest rates by 25 basis points. Now, I had speculated that I thought that perhaps they might be on hold for a little while. They're apt to do that from time to time. Wasn't to be. So they did decrease. We blew through the support here that we were holding right above this 102 area. All right, but now we're looking to bounce back a little bit here. So right back into the same neck of the woods. And if you see, we're right back to this 102.30 as well here. So it's going to make up its mind where it wants to go today. But Aussie, they lowered interest rates overnight, and that was the cause here for this decline. What else do we want to look at? I'm just looking at purely news stuff right now, and then we'll get to the greater issue here. Euro Swissy. You can see Euro strengthened versus the Swiss franc. Swiss franc weakened to above 124. All right, overnight or earlier this morning, CPI in Switzerland came in much lower than expected. Two-year low for decline there, minus 0.5%. So they're facing some serious deflation. They've got some problems here, looking at a potential recession going into next year, and the SNB may need to move further on the strength of the currency here. So there's talk about negative interest rates, perhaps moving the targeted area. Okay, it was up to, it was lowered to 120 at one point. They may need to lower it further to 130 versus euro. So we're going to keep an eye on Switzerland, but they're seeing deflation. Okay, and they're also looking at potential problems with recession moving forward. Now let's get to the mighty eurozone. Okay, just a mighty eurozone here. Okay, and you can see here yesterday had this little move happening right here. And what happened yesterday? Well, S&P came in and they put just about all of the European nations on credit watch, but they put the thing that was significant about it is that they put the strongest one. So Germany was put on credit watch for downgrade, France, Netherlands, I think Norway, everybody pretty much. And S&P is essentially saying the same thing they did here in the U.S., that if something doesn't come out of this big Euro finance minister meeting by the end of the week, that they're thinking about downgrade. Okay, they're saying that the politics is trumping the economics, that these guys can't get their act together, nothing's going to get done, there's problems in the Eurozone. Alright, so now you've got Merkel and Sarkozy, they're sort of blowing that off because they came out with an announcement yesterday that said, okay, well, we're looking to increase the fiscal union here in the Eurozone, we want an expansion of the ESM, that's the Stability Fund. They want to impose penalties against people that or countries that don't stick by balanced budget amendments, which they also want people to have. So really, it's just been really more of the same there. They really haven't come up with anything new. They haven't said anything different. Okay, but now that they've got this S&P thing hanging over them, that could cause everyone's debt to rise a little bit more. And if they start to feel it in Germany, that's going to be an issue. But I think it's the kind of thing where bonds fell initially in Germany, but they're sort of moving back a little bit. So that's it's interesting when you think about the yields lowering there in Germany, but Germany is the only real alternative that you have in the Eurozone when you consider all these other countries. So anyway, that's what happened there with the euro. Euro came down. All right, then we're moving up higher, and now back down. But now we're coming back a little bit. We've got a little bit of risk appetite this morning. Okay, you can take a look at S&P. S&P sold off just a bit yesterday, but we're climbing back up. We're right at this 1259 level. 1267 is really the number on S&P to keep an eye on, and we want to watch that. We'll look at oil. Okay, oil took the same move lower, moving back up. So most of these charts are going to look the same here. One of the interesting charts that we're going to see is gold. Okay, and you'll see that gold actually has been moving a little bit lower and looks to be a little bit more muted towards the downside, and that's interesting when you consider the properties that it takes on. It's one of these things where sometimes people think gold's a risk asset, sometimes it's a risk aversion asset. Well, it can really do its own thing, so it's kind of tough to classify gold. But generally speaking, I think you get some of the bigger moves when you have some of the more sovereign problems that are taking place. So that's really what's been happening up to now. I just want to go back to the euro. Okay, we can take a look at the euro. We're coming up right here on the daily pivot at about 134.20. All right, they had their GDP report, came in as expected, 1.4%, and that's nothing new there. Household consumption, the same, and German factory orders actually came in higher than expected as well. So those were all good numbers. What are we going to get later today? We're going to get the Bank of Canada here reporting their rate policy decision. All right, and no one's expecting them to change, so they're expected to stay at 1%. That could give them a boost. Perhaps 102 here is acting as a little bit of resistance. Maybe we come back down towards this 101 area, but it looks like we may trade the range a little while because we still have the overhang of the eurozone risk from the nothing getting done at this eurozone leaders meeting. Okay, and then also we have the ECB rate decision coming out on Thursday, where they're expected to cut another 25 basis points. So that's kind of, we're keeping an eye on the euro for that. Just looking at the pound here real quick. Okay, pound just sort of sticking to the middle ground, staying right in there. They had, what did they have? They had, Halifax home prices declined a little bit more than expected. So, not a big deal there, but really the pound is sort of that middle ground in the UK, or excuse me, over in Europe, where it's not quite Europe, it's not quite Switzerland, it's sort of right in between. So you can sometimes see a little bit of muted movement there, although the pound will move. So that's kind of what we're looking at there. They also have the rate decision on Thursday, but don't forget that they don't issue a statement with that. So we're going to have to see if they expand their asset purchase program, which is really what they've been doing, or what they did last time around. So it's expected to remain the same for now, but we'll have to see what happens there. So that's really what's going on. There's no news in the U.S. today. Nothing really happening here for at least the next couple of days. We're kind of light on news until Thursday when we get the initial jobless claims, but that's not a real tremendous deal. And then lastly, you can just take a look at, let's look at Euro Yen here, and you can see how Yen strengthened on that move yesterday and has been strengthening. But we're giving a little bit back. So it looks like people are dipping their toe in the water this morning for a little bit of risk taking. I mean, people understand what's going on in the eurozone now. It's not like this is a new phenomena that's hit the market. Okay, we know that this is a slow process. We know there's not going to be an immediate result. We know that Mercosi, with all their best intentions, aren't going to step outside of the box and switch the mantra that they've been sticking with. So S&P, I think is right to put them on credit downgrade. I mean, let's face it, they downgraded the U.S. and the U.S. deserved it. Not that I love S&P, and I think that these rating agencies are, just as complicit as the rest of these crooks. But it's a warning shot, is what it is. So we're looking today to see if we can regain some of yesterday's losses here, and we're going to keep an eye on some of the risk themes that are happening. But don't forget, we've got this Santa Claus rally that started that we want to keep it moving. Okay, markets want to go higher if they can, so if we can avoid any sort of landmines in the Euro session, we may get a bounce here this morning. So that's what I've got for this morning, gang. Good trading to all.